It's been said, if you have nothing nice to say, you need to say nothing at all. Well, that may have been the beginning of the culture that we're in today, where everyone should get a trophy and we won't hurt anyone's feelings. The actual fact is, that particular saying came from a cartoon character called Thumper from the Disney movie Bambi. That should tell you all you need to know about how ridiculous it is. Hello, Dave Dooley here, a 40-year veteran of the financial markets and CEO of a registered investment advisory firm, bringing you great information on retirement planning and walking you through the do's and don'ts in or leading up to retirement. Today, I'm not going to be nice, rather speak frankly about why so-called diversification in your portfolio is for the foolish and those too lazy to do their homework. Over the last 5 to 6 months, seeing the sheer number of new clients coming into our offices with portfolios consisting of 40 to 50 mutual funds or literally 30 to 50 stock positions is absolutely crazy. These families were told to take the approach to diversify to spread risk amongst a large number of companies and therefore protect against major moves in the markets. This myth was sold to the American investor decades ago with the inception of the first mutual funds in the early 20th century. The fact that for 100 years now that mutual funds have high fees, poor tax efficiency, diluted returns, and consistently underperform even basic indexes, not to mention no way of protecting those positions in fast-moving markets, is an outdated concept. Warren Buffett has said for years and constantly beats the drum to own individual companies and stocks. The fact that you become a part owner of that company drives you to do the homework needed to assure yourself you're making a great decision. That's right, your advisor has to do homework, not just shove you an index or mutual funds and take the rest of the day off. What's remarkable is the fact that they charge you an advisory fee on an annual basis, then have your money sent to fund managers who charge you additional fees. And you sit back and you let it happen. Warren Buffett is the greatest investor of our lifetimes, invested in very few companies based on their underlying performance and the risk of whether management can execute efficiently. He then focuses on buying those companies at a discount to their current stock price. Again, this takes work, patience, and a deep dive into individual companies. But he has proven over and over again these companies will outperform in the long term and therefore greatly reduce risk. On the other hand, betting on every horse in the race will reduce risk, and it will also guarantee you performance will be mediocre at best and terrible at worst. But a major way to secure those individual positions from major swings is options. And that is also a strategy he employs to protect from giving back those major gains he has accumulated over the years. Warren's partner, Charlie Munger, a colorful character and 99 years old, not long ago was asked if he could own one company today for the next 30 years, what would it be? He responded quickly with Costco. When he was asked why he would own Costco, he responded to the question, have you ever been to Costco? Did you notice the parking lot, no matter what time of day that you went? Do you need a subscription to get into Costco? Do you go in with the idea to buy $100 worth of things and walk out with $500 worth of stuff? Was your experience fast? Was it efficient and fun? He said, that's why I own Costco. Warren Buffett, in his earliest years, put over 50% of his net worth in one company, Geico. 2 months ago, we purchased Meta and Nvidia at a huge discount. These companies had lost over 60% of their stock value in the past 12 months even though their revenue had continued to increase quarter over quarter. 45 days later, we've seen a 50% return and still growing on those particular companies. We now have these positions covered with options from giving those profits back that we've gained over the last 60 days. So the bottom line is this: just because you're getting older doesn't mean getting complacent. Continue to grow your portfolio with great companies and protect those company shares with options. If your firm is taking the lazy path, then it's time to move on. Listen, visit our website to get more great videos. Better yet, sign up for our weekly newsletter and subscribe below to continue to get great content. Till next time.